Gold just hit $4,697 an ounce, and almost nobody is talking about why. Not the inflation numbers, not the Fed rate, not the Iran sanctions or the Bitcoin headlines. There is something older and quieter driving this, and if you have ever stood in front of a painting you could not afford and felt it, you already understand it better than most Wall Street analysts do. Here is the frame I want to use today, because I think it unlocks something about gold that pure macro commentary misses entirely. If you understand why a rare painting or a bottle of first growth Bordeaux holds its value, you already understand gold better than you think. I mean that precisely, not as a metaphor. The mechanics are the same, and once you see them mapped onto gold's actual current numbers, the price sitting at $4,697.80 stops looking like a mystery and starts looking like the only logical outcome. Let's start in a Paris auction room. A bottle of 1982 Petrus, one of the most sought-after vintages ever produced, sold at auction a few years ago for over $30,000 for a single bottle. The vineyard that produced it is 28 acres, that is it, 28 acres, forever. You cannot plant more Petrus. You cannot manufacture the soil, the microclimate, or the year 1982. The supply is permanently and irreversibly fixed. Every bottle that gets opened and drunk makes every remaining bottle slightly more valuable. That is not speculation, that is arithmetic. Now replace the vineyard with the Earth's crust. All the gold ever mined in human history would fill roughly 3½ Olympic swimming pools. That is the entire above-ground stock of gold accumulated over thousands of years of civilization. The annual mining supply adds roughly 1.7% to that pile each year, a rate that has barely moved in decades because the easy deposits were found long ago. Petrus has 28 acres, gold has the planet, and the planet is almost out of new places to look. Now think about provenance. In the fine art world, provenance is the documented history of ownership, who held a painting, when, and why. A Basquiat that passed through major collections carries a story that makes it more valuable than an identical Basquiat of uncertain origin. The story is part of the asset. Gold has the oldest provenance in financial history. It was money before writing existed. Every major civilization that has ever risen has used it to store wealth across generations. Central banks currently hold over 36,000 tons of it precisely because they trust nothing with a shorter provenance. That institutional stamp of legitimacy is not decorative, it is load-bearing. Here is where it gets interesting for right now. The US is expanding Iran sanctions this week. Bitcoin just broke $80,000. Markets are watching Nvidia earnings. And the mainstream financial media is treating gold like a quiet background asset while all of this happens. But look at the actual number, $4,697.80 an ounce. 3 years ago gold was around $1,900. 2 years ago it crossed $2,000. Last year it was pushing $3,200. And now it is sitting at nearly $4,700. That is not a safe haven spike. That is a structural repricing, and the art and wine world would recognize it immediately. When a category of collectible asset gets discovered by a new class of buyer, the repricing is never smooth or gradual. It is lumpy, fast, and then stubbornly persistent. Think about what happened to Basquiat prices when Asian collectors entered that market in the 2010s. Or what happened to rare whiskey when American collectors started competing with British ones. New money meeting fixed supply does not produce a gentle upward slope, it produces a step change. Central banks bought a net 1,037 tons of gold in 2023 and followed it with near-record purchases in 2024. That is the new collector class entering the room, and retail Western investors are still mostly watching Bitcoin. Let's talk about illiquidity, because this is the part of the analogy that most gold commentary skips entirely. A bottle of first growth Bordeaux is illiquid. You cannot sell it at 2 a.m. on a Tuesday at anywhere near its true market value. You need the right buyer, the right auction house, the right timing. That illiquidity is not a flaw. It is a feature that filters out weak hands and rewards long-term holders. Physical gold has the same quality. Yes, there is a spot market, but the ratio of paper gold, futures contracts and ETFs, to actual physical gold available for delivery has been estimated by some analysts at over 100 to 1. That means for every ounce of real metal backing the paper claims, there are potentially 100 investors who think they own gold but are really holding a financial product that behaves like gold until the day it does not. The 1982 Petrus in a vault is not the same as a receipt saying someone somewhere once saw a 1982 Petrus. Physical is physical, paper is paper. Now here is the generational holding piece, because this is where the analogy gets personal. The families who bought first growth Bordeaux in the 1970s and held it through inflation, through recessions, through wars, are sitting on assets worth 10, 20, 30 times what they paid. Not because they were brilliant traders, because they understood that some things do not need to be traded, they need to be owned. Gold's purchasing power over 100 years has been essentially flat in real terms, which sounds underwhelming until you compare it to every fiat currency that has existed over the same period. The US CPI index right now is sitting at 332.813. That means what cost $1 in 1982 costs over $3 today in broad terms. The dollar lost that value. Gold did not. The wine collector's heirs do not care what the wine's paper price was in 1974. They care that the asset is still there, still real, still scarce, still wanted. So where does gold go from here? You have been asking me this directly in the comments, and I want to give you a straight answer. With the Fed funds rate currently at 3.63% and real GDP growth running at only 1.5%, the macro backdrop is not getting easier for dollar assets. Real GDP below 2% with a rate still above 3.5% means the economy is carrying a heavy load with a slow engine. That is historically the environment where real assets with fixed supply get the most aggressive repricing. Do I think $5,000 gold by end of 2026? Honestly, looking at the trajectory, $5,000 does not feel like a ceiling. It feels more like a waypoint. But I want to be careful here. This is not a prediction, it is a pattern recognition exercise. The same structural forces that repriced Basquiat from obscurity to tens of millions are visible in gold right now. New buyer class, fixed supply, and a growing awareness that the paper version is not the same as the real thing. Here's what the analogy ultimately reveals about gold's role in a portfolio. You do not buy a 1982 Petrus to flip it next quarter. You do not buy a Basquiat because you think it will outperform the S&P 500 this year. You hold these things because they sit outside the system that can be inflated, diluted, or defaulted on. Gold is not an inflation hedge. That framing is too small. Gold is a permanent record of stored human effort that no government, no central bank, and no algorithm can replicate or destroy. The wine collector understood that. The art collector understood that. And increasingly, the central bank buying 1,037 tons in a single year understands that. The question is, do you? Most people who watch channels like this never actually act on what they learn, and that gap between knowing and doing is exactly what costs people over the long run. If you want analysis that goes deeper every week, real numbers, real macro data, real structural forces moving gold and precious metals without the hype, subscribe now and make sure you do not miss the next one. One thing I want to be completely straight with you about, I am not a financial advisor. What I am is someone who finds this genuinely fascinating and shares the thinking out loud as I work through it. Everything here is my own research and my own conclusions. Please do your own digging, talk to people you trust, and make the call that fits your own situation. And if today's frame changed the way you see gold, drop a comment below and tell me what landed. I read them all, and the questions you ask shape what I cover next. See you in the next one.